Most importantly, I think, is going to be the fact that any country with a domestic stock market or stock exchange is going to have their own self-appointed MicroStrategy from a national perspective. Not only are we going to have a strategic Bitcoin reserve, we're going to have a strategic public reserve or private reserve that's listed on the stock exchange. It's going to act like a MicroStrategy on a local level. We've heard Trump allude, even facetiously, to the fact that he could pay off the US debt with a little Bitcoin. If that's the case, one Bitcoin could pay off the US national debt. That's currently trailing at about $36 trillion. So maybe my method for calculating Bitcoin is a lot closer to the mark if Trump thinks it's 36 trillion a coin. In order to work on a Bitcoin standard, you need to over-collateralize your lending, not under-collateralize it. So my thought process and thinking is Bitcoin can grow 50, 100, 1,000x from here. Bitcoin is the first perfect money. It's what I call the triple point of money. I look at Bitcoin and think there are three functions of money with Bitcoin. There is store of value, mean of exchange, and unit of account. And for the first time in history, Bitcoin allows the function of money to exist in all three states at the one time.
Mr. Peter Dunworth, thank you so much for joining me here today, being a playable character in a sea of non-playable characters. For those of you who don't know Peter, Peter is the founder of the Bitcoin Advisor, which helps you buy, secure, and manage your Bitcoin so you can own generational wealth without losing sleep anywhere in the world. And besides that, all the stuff he does for the Bitcoin world, he's one of the most genuine, smartest men I know in the Bitcoin space. So it's a pleasure to have you on today, Peter. That's
very humbling, Brandon. Too kind.
Absolutely. Well, it's I could have said much more, but in for the sake of the viewer, let's roll into some of this here. We were just talking about many things offline, talking about strategic Bitcoin reserve. So I want to start with that. If that doesn't happen day one, but also Mohammed Al-Arian just said something that was kind of generic. We'll touch on that. We'll touch on Bitcoin being a triple point asset that only very few people can explain some of these concepts, and you're one of these people. So touching on that, the yields spiking here in America on the bonds. So just touching on numerous things, but I'd love to touch on first the strategic Bitcoin reserve. Your thoughts just positively if this does happen day one, but also people thinking that's going to happen right away. What if Trump gets in and he does a bunch of stuff and then that doesn't come? Maybe he pardons Ross, does a bunch of stuff, but that reserve doesn't come, or what people are thinking. What's your take on what happens here in the next few weeks?
I think the strategic reserve has got a lot of momentum in the Bitcoin community, and I wouldn't be surprised if it is a disappointment. I guess that might be a little bit of PTSD for being in Bitcoin so long. It feels like it should happen, and it's the gradually part that grinds us all down and then disappoints us. So without wanting to be the bearer of bad news, a strategic Bitcoin reserve on day one, if it's not announced, which is probably my default that it won't be announced on day one, I don't think we'll have any significant change on the market. Where we are today on the 10th or 9th of January, where you are, 10th where we are. We're living in the future down here. If only that would translate to being able to manipulate the markets and buy low, sell high. I think it's not going to be a big deal because we've got sort of a bit of a pullback. We've had the talk of the 65,000 coins being sold by the Department of Justice, which is probably implicating the downtrend that we've got at the moment to circa 93,000. The big part here, though, is, I think, and this is where we don't want to lose the forest for the trees, that the announcement of the strategic reserve, if it's not implemented on the first day, and technically it shouldn't be for the benefit of the US, it should be a slow burn where they're allowed to buy Bitcoin and absolutely dominate that purchase of Bitcoin from a government perspective in silence, under cover of darkness, so to speak, that they don't want to be signaling to the world what they're doing. The bigger part of this picture, I think, is that this is signal to the world that the US, the global reserve currency, is going to have a strategic reserve in this. And most importantly, that is a shot across the bow for anyone else who has a currency that they need to do that too. And one thing that I haven't really heard talked a lot about at the moment, but I think this is of significant importance because no one's really talking about this, but the strategic Bitcoin reserve is going to be critical from a government perspective or a nation state perspective. But at the same time, there is also going to be a private Bitcoin strategic reserve. And this is where I think MicroStrategy is probably the most significant player in the space. It's effectively a Bitcoin strategic reserve for the private sector. And I think if we break down the implications of those two things, although we might have some disappointment on day one in the first few months of, no action on that strategic reserve, the implication to the rest of the world is that every country is going to need a strategic reserve in Bitcoin themselves. Anyone who holds foreign currency is going to have some form of denomination in Bitcoin. And then most importantly, I think, is going to be the fact that any country with a domestic stock market or stock exchange is going to have their own self-appointed MicroStrategy from a national perspective. It's all good and well to send money across to the US for, say, Japan, China, the EU to MicroStrategy, invest in that. What we're going to see, and Dylan LeClaire, absolute living legend he is, and what he's instituted with MetaPlanet in Japan is effectively, and I don't want to sort of dissuade anyone from thinking that Dylan is not absolutely brilliant, and he is. He's effectively taken the MicroStrategy playbook and applied that to a stock on the Japanese stock market. Now, I think there are multiple different stock exchanges across the globe. It is going to be of national import for every single stock exchange to have a self-anointed MicroStrategy, a national MicroStrategy that they can support and that can take pools of capital internally into that. And so I look at, not only are we going to have a strategic Bitcoin reserve, we're going to have a strategic public reserve or private reserve that's listed on the stock exchange. It's going to act like a MicroStrategy on a local level. And this is where the suddenly part could come a lot sooner than we think.
I've seen that gaining traction lately. People just talking about, I think it was when Saylor took a picture with Eric Trump or Donald Trump Jr., one of them the other day. And it was kind of making the rounds of, is Saylor the strategic Bitcoin reserve for America? What are your, and you kind of just alluded to that in a way where it's going to be important to have that public stockpile, but also some companies doing that in the background. Is that kind of what you're alluding to almost?
I think twofold. I think it's actually going to be, there's going to be a delineation of public money in the government sector having a strategic reserve, and then there's going to be private money in the form of Michael Saylor doing that. And this is where I think the headline was Bitcoin is on the menu, and he was at Mar-a-Lago with Eric Trump was the reference that had tongues wagging. And I look at that and think there's no conflict of interest with MicroStrategy and the US government supporting one another. And I look at this and think, and it's only conjecture, I haven't spoken to Saylor on this, and I just want to preface this by saying I think Saylor is our greatest Bitcoin advocate, and I have a huge amount of respect. I think he's the best amongst us, along with one of my other favorites, Jeff Booth. He would have either implicit or explicit endorsement from the US government or the SEC to do what he's doing. So that tells you everything. The government is completely aware. They've effectively sanctioned his actions in doing that. And although the at-the-market offer where he basically issues stock on a daily basis to convert that cash into Bitcoin is a huge deal. The bigger deal about this, I think, because there's a far greater pool of capital around that is managed in a far more inefficient manner, is the convertible bond market. To me, that is an endless pool of capital that he can draw from, because that credit can be created out of thin air to pay that. And what he's doing when it comes to the US, I think is critically important. And my point being is that the US government will be happy to support Saylor doing that. And I think as long as the provision is in place that those Bitcoin are only custodied on US soil. I think they would have and take a very different approach to Saylor if he was custodying those Bitcoin in China.
That's a great point. Yeah, it is really wild when you see what's going on and you have Wall Street just grasping, trying to figure out what in the world is going on. It feels like insurance, bonds, they're on the clock. It just seems that way. The whole insurance market, the whole bond market, which is the insurance market and to a large degree, they're on the clock. Like they are the premium that's going to be eaten up by Bitcoin in the coming years, is it not?
Yeah. And this is where probably the canary in the coal mine for the insurance companies anyway, and the traditional finance space. when it comes to those convertible notes with MicroStrategy was Allianz. In the latest tranche they sold, I think there was circa $2.5 billion of convertible notes sold, and Allianz accounted for over 20% of those. So Allianz in traditional finance is one of the most well-respected companies on earth, one of the best bond managers, and to have a company of that stature purchase 20% of a convertible note bond issuance for a company that buys Bitcoin is a huge deal. That is making waves across traditional finance. Allianz did what? In TradFi meetings, when I talk about Allianz doing that, everyone knows who Allianz is. The reputation that precedes it is enormous. A great custodian of money over many years, one of the best insurance companies in the world, and to have them invest in a speculative asset such as a convertible note and take 20% of the issuance, I think is an enormous tell for where this is going. And then that then opens up the pool of capital and capital allocators in that space to then piggyback into the next round of convertible notes that get issued.
So I want to, the logical question here is like into price. And a lot of people are like, well, why isn't Bitcoin, 5 million or 1 million or 10 million or whatever, and we'll get into that in a little bit. Cause again, there's not many people that can break down numbers like you can, but before that, you touched on Allianz, which is one of the things I wanted to ask you, which I believe happened today or yesterday, was Mohammed Al-Arian talking about this very thing in essence, and saying that, admitting, again, just on CNBC, like, oh yeah, inflation is just an arbitrary number. 2% is just an arbitrary number that we throw out there. And I was thinking about it today because I was listening to some Jeff Booth as well, and thinking about our interview, you and I was watching some Jeff Booth. I saw this Mohammed Al-Arian thing, and it just got me thinking, like, feels like we're on the verge of the masses just really starting to wake up because of technology. You and I literally across the world being able to talk to each other. And you have, when people realize inflation is, like, hey, I'm going to give myself more time in the day, so I'm going to make my clock 25 hours instead of 24. And it's like, when you realize that you can't actually do that, and you're not making yourself wealthier, like, who stands to benefit from that thing? As Jeff Booth always says, you have to ask yourself, who stands to benefit in that system? Are we just on the precipice of something massive in the next, could be really short order, months, but the next few years? It just feels like people are just right there clamoring for an answer, and it's right in front of them. And we're just on the verge of something. When guys like that, Mohammed Al-Arian, who has been so respected for so long, or PIMCO, or doing things with Allianz, and he's out there just basically getting shoved into a box. I mean, you have Joe Kernan shoving him into a box, in essence, stuffing him into a locker. I mean, like that's unheard of. It's so unheard of. I mean, what are your thoughts on this? I see you smiling and laughing over it.
I just find it so amusing because Mohammed Al-Arian is a god in traditional finance. He's one of the greats. Like, he's manages money. The people who he talks to are sovereign wealth funds, governments, people of the highest order in that world. And what's interesting, and this is where I think Joe's just playing cat and mouse with him, in that Mohammed knows full well exactly what's happening here. And to raise a point, he, back in October 2023, I think he was on CNN, and he mentioned that Bitcoin was a flight to safety. So that was over a year ago. That was nearly 15 months ago that he was talking. That was pre Larry Fink coming out and saying Bitcoin's a safe haven asset. Mohammed Al-Arian's term was, it's a flight to safety. And that was a canary in the coal mine for me, that there was a huge seismic shift in what his thoughts were, because he's talking to a different pool of capital allocators. If we look at where Bitcoin is on its journey, it's like an upside down pyramid. At the moment, we have only just entered the institutional phase of capital allocators. And this is kind of the irony of Bitcoin, is that if we look at that upside down pyramid, the very start of Bitcoin and capital or money allocators was actually cypherpunks. They created this thing and effectively created something for nothing. So it just started as a tiny little speck, and then it created interest and buzz around retail investors, punters, degens, whatever you want to call it, and that brought more capital to it. And then you had hedge funds buy into it, and now all of a sudden we now have Bitcoin, nearly a $2 trillion asset, where it's now at a size that is on the institutional radar. And these capital allocators, from an institutional perspective, and who he talks to mainly, are of a size where they're not concerned about the opportunity of what's presented with Bitcoin. all they're concerned about is being able to get out of the trade, not into the trade. And a $2 trillion asset class is really so small that they become the trade if they get in. And to draw another parallel, you look at Berkshire Hathaway. His early years' performance was so far ahead of the S&P 500. He outperformed because his market cap was so small. And sadly, his business has grown so successfully, he's become a victim of his own success in that the business has grown so large, he now is the market. So to outperform the market, he's got to do special things. And the problem that he's got is, and this is something that a lot of people misunderstand in traditional finance investing, is Warren Buffett was never interested in diversification. He was only interested in the best possible assets that he could buy. But because his assets under management, so to speak, grew so large, he became the market. He had to diversify because he couldn't put all of his eggs in the basket that he wanted to. And back to Muhammad El-Arian, it's watching that interplay between Joe and Muhammad, basically Joe taking jibes at him and saying, yeah, you should probably get some. I'm 100% confident Muhammad will have a personal allocation to it, but the people he's talking to who allocate capital in the trillions of dollars don't have the ability to get out of the trade of Bitcoin yet. But this is the unique thing about Bitcoin. Bitcoin is going to continue to grow up that scale, and as the market cap of Bitcoin grows, it allows more and more large capital allocators to not only get into the trade, but to get out of the trade. And no one of that ilk is actually going to apply capital to a trade that they can't get out of. They just don't do it. They make sure they know where the exit is before they get into it, and they're not putting money into the trade until they've got the exit locked down. And so as the market cap of Bitcoin continues to grow, we'll have more and more $1 trillion investors invest capital.
This has always been the game, or this always was going to end up being the game. And I think there's a lot of people in the Bitcoin space that are, upset. They're upset that America's talking about coming in, or, governments or G7 countries, sovereigns, whatever. And it just kind of goes on down the line. But this was always the game, right? Like it's money for your enemies. This is what brings, it's convert the king. Like this is what brings the capital into the space, and unfortunately the average person, you're not going to have 8 billion people come into it, front run all the wealthiest people in the world. That's just not how it's going to happen. Right. So, I mean, I would love for you to kind of touch on that and just, I guess that's the thing that you see it a lot, right? You see a lot of fighting on Bitcoin Twitter, which again is an echo chamber in itself, but you see a lot of that happening where people are kind of going back and forth on whether it's a good thing or not. And at the end of the day, that has to happen. And secondly, I would love your thought on where do you think the so-called price is? And again, I know it's hard, as Jeff Booth would say, it's hard to measure this system with another. How are you measuring Bitcoin with this random piece of paper over here that's then trying to measure the system? So I know it's a purchasing power thing at the end of the day, but where do you think that tipping point is when we're talking these sovereigns or governments coming in, that all of a sudden it's just like, okay, the market's big enough to take those things on? Because again, I think it's so many people, and we touched on it earlier. It's like, it feels like you're right there, but it's, you can't fit the round peg in the square hole. It's got to be the right time in essence. So where does that lie?
That's a really good question. There are many parts to it. I'll do my best to see how I view or share how I view the world on what's happening here. When it comes to Bitcoin, I understand that there are a host of cypherpunks and OGs who were early to Bitcoin who were literally 10, close to 15 years in front of where the smart money is, who feel like they've been dislodged from the market. But I will comment and say that one of the comments that I really sort of took to heart was from American Hodl when he said Bitcoin's not for everyone, it's for anyone. And to that point, we've got to remember that, to your point that you raised, that it is money for my enemies. And not that I'm sort of creating that division or want to stoke any sort of further division in that capacity. I just want to say that, hey, at the end of the day, Bitcoin is for anyone who wants to adopt it.
Permissionless.
And correct. And this is where the real value in Bitcoin is actually going to grow by more people adopting it, not less. And if we juxtapose that entire scenario of Bitcoin's going to gain strength because more and more people are going to adopt it and recognize what value it brings to them in their personal life, to what's happening with, say, the US dollar, where in the last 2 years, maybe coming up to 3 now, whatever it is, the US did something unthinkable in that they excluded Russia, one of the G7 nations, from the SWIFT network. And you remove people from the network, it inherently makes that network weaker. It doesn't make it stronger. And now you've got the thought of BRICS coming up, and you've got Russia, China, Brazil, India basically creating their own, global reserve or potential competition of the global reserve currency. Now, I don't think it'll ever be a competition of the US dollar, but you've at least created an incentive for them to create an alternative reserve currency. And I just look at this and think that's complete madness on the US's part, because the US should be the global reserve currency for everyone. And when you leverage that with Bitcoin, all of a sudden we have effectively a global reserve currency that can be backed by collateral that is what I believe perfect collateral. And this is where, to me, a lot of people don't really understand the role that collateral plays in our financial system. And as I was looking over a couple of things, a couple of chats that I've had with a few people over the years, and we're sort of entering this phase now where the debt problem that we've got is becoming acute. And everyone talks about the debt problem, but it's not a debt problem. What it is a collateral problem. And just to explain that for a second, when you have a debt problem, it's backed by collateral. And so when someone doesn't pay a debt, you simply take what was the security that they secured that debt with to make good or make whole on that. The problem we've got is that the debts that have been issued, the borrower doesn't have a problem because he just is going to do a workaround as to how he pays that out. The problem is the person who's holding the security and realizing that they don't have any security there. There is no there when it comes to the collateral they're holding. The collateral they're holding is actually worthless. And therein lies the problem with the banking system that we've got. So in order to solve the debt problem, we really need to solve the collateral problem. And the collateral problem can be solved by one of two ways. You can either inflate everything to infinitum so that now all of a sudden you've basically adjusted the debt to equity ratios and everyone can move on with their lives. But how you practically do that is you pump money into certain asset classes. And if I look at really broadly, what are the asset classes that you've got to pump the money into? You can pump the money into the bond market, but that's not going to help because that's debt, adding more debt. You can pump that more money in collateral, or you can pump more money into the stock market, which is going to basically get you probably a 10 or 20% return on your money if you put a couple of $1 trillion into that. So you're going to create maybe $50 trillion of equity. And you can put that into property, which if you put a couple of $1 trillion into property, it's only going to move the needle a little bit. And everyone's already having servicing problems with their debt. So it's hard to create collateral by pumping it into the existing asset classes that we've got. The alternative, and this is what I think is the path of least resistance, it's going to cause the least amount of pain, is if you pump trillions of dollars into buying Bitcoin, you're going to pump the price not by 10, 20, 30%. You're going to pump the price by 5,000, 10,000, 20,000%. And all of a sudden, $1 trillion into Bitcoin will probably push the market cap up $50 trillion. And all of a sudden, now we have collateral. And this is the fundamental problem that we've got with our banking system at the moment, is that we're effectively operating on effectively an under-collateralized banking system, in that you put up $1 and they lend out $20 on the back of it. So it's like an upside-down triangle when you look at how to balance something. Our system only requires a little bit of equity to create a whole host of debt. Now, it's akin to looking at or trying to balance an upside-down pyramid. That to me looks like a really unstable structure. And we're seeing, you've seen the meme, basically that one little thing on a stack of all sorts of machines sticking together, and it's got this one little toothpick basically holding it all together. And if you flick that out, the whole thing falls over. That's what our under-collateralized financial system looks like now, except everyone's in the bag for it. The property market's in the bag for it. The government's in the bag for it. The stock market's in the bag for it, because it all rests on leverage. That's what an under-collateralized system looks like. I guess you compare that to what a Bitcoin standard looks like. you basically have a pyramid that looks like that, where if you want to borrow in a Bitcoin standard, you have to over-collateralize your lending. So if you want to borrow $50, you've got to put up as a minimum $100. They'll only lend you 50% of what you've got. And if you compare that to our market, like the traditional finance that we look at, if you want to borrow $1 million on a home in Australia and probably the US too, you only need to put down $50,000. So you put down 5%, they'll lend you 95%. That seems insane. And so what my point with this is that Bitcoin has the ability to grow in size to an asset that is probably 10, 20, 30 times bigger than the entire asset class at the moment that we hold. Because in order to work on a Bitcoin standard, you need to over-collateralize your lending, not under-collateralize it. So my thought process and thinking is Bitcoin can grow 50, 100, 1,000x from here, and it still won't really touch the sides from a collateral perspective as to what it needs to support. And this is where, if you peel layers back on this with the lending, homes are a horrible, horrible form of collateral. And this is what underpins most of our lending in society, and governments and homes underpins most of our collateral. If we were to create Bitcoin as the perfect collateral, which I think it is, and underpin our financial system with Bitcoin, firstly, what needs to happen is Bitcoin needs to increase dramatically in value. But by underpinning our financial system with Bitcoin as opposed to homes, is that allows the financial system to operate and use Bitcoin as a collateral rather than our homes. And what that means is when the system becomes basically over risky and looking like it needs to basically capitulate like it did during the GFC. During the GFC, all of the collateral was in the homes. So what ended up happening? Basically, millions of people were dispersed and lost their homes because they couldn't afford to meet the repayments. The collateral that they created, the system became worthless. Property prices fell 30, 40, 50% in some places, maybe more. And that was because the collateral wasn't really good collateral, because no one really wanted a third home in the middle of the desert or wherever it might be. However, there's 8 billion people on Earth who are going to need Bitcoin, but maybe only 1 million or 2 million people actually know they need it right now. And so this is where you can de-risk the whole financial sector by using Bitcoin as a collateral versus homes, governments, and the like. And most importantly, by using Bitcoin as collateral, two things happen.
If you're liking this interview, but you're just wondering, you know what, Brandon, this is amazing stuff. And I get you have these guests on and they're talking about how orange pilling the world is so great and how Bitcoin is going to take over the world. How in the world do I educate my family and friends? How do I get people to understand what most people just don't care about, quite honestly? Bitcoin trading cards is the way to do that. When you open up these cards, you see the foil cards, you see the chase, you see the glossy cards, young, old, boy, girl, man, woman, it doesn't matter. People love these cards. It's awesome because they're super valuable, by the way. Amazing little side note. However, it Trojan horses them into the most important thing of the day. It's not politics. It's not all the things that we fight about. It's changing the money, fix the world. Bitcoin trading cards is the best way that we have going in order to do that, no matter who you are. You're going to love them. Playable Characters 10 for 10% off at checkout. Playable Characters 10 off at checkout. btc-tc.com. You're going to absolutely love these things. Now back to the show.
The Bitcoiners are psychopaths who are never going to want to sell their Bitcoin. So they're not going to cause huge inflation. But if you financialize the homes and the stock market, that's a very fiat system that basically propels itself into consumerism and short-termism and spending and buying and inflation and running that cycle of inflation. Whereas by monetizing Bitcoin, and we've both got experience dealing with Bitcoiners, we know Bitcoiners who are worth probably tens, if not hundreds of millions of dollars, driving around in 10, 15-year-old cars because they don't want to spend their Bitcoin. Now, that seems mad, but that's just the attraction to Bitcoin. It causes a completely different way of thinking. And to me, this is the important thing that we've got to look forward to. Once the rest of the world figures this out, governments start to figure out, BlackRocks of the world start to figure it out, then the financial system is going to be built on Bitcoin, and that's going to be the pristine form of collateral. that's going to be the collateral that is rewarded with the lowest interest rate possible and the best terms.
So you touch on so many great things, and you sparked something that I had a couple conversations over. We were just talking offline about each other's holidays, and I had a few conversations with family, and inevitably, Bitcoin comes up. We get into some, hours long deep into the night conversations, and some of the big things were, hey, I agree with you on all these things. However, it's and where I'm going with is, you were just saying, again, it's over collateralized, it's an equity based system. So give me 100% of the Bitcoin, and I'll give you 50% back. Now those are maybe different systems we're operating in. That's what the people that I was speaking with could not understand, and they were also confusing inflation. They were thinking that was capitalism in a way, where it's like the 99% of what they understood was correct. They were 90% there, but they couldn't understand that the money was the accounting system underneath the economic system that you choose as a society. And so my question to you is, because this is what the question I kept getting, and I tried 10 different ways to explain it, is this deflation thing of, well, it's not going to work because we'll end up having famines. Because to your point, if you have all this money and you're driving around in a 15-year-old Toyota, you're just not going to invest in the economy. So what happens? We just run ourselves into the ground, and they could not get over that fact no matter what I did. So how do you see that world? Because again, it's a world we've never had this ability to have perfect money, or at least the most perfect money we've ever discovered as human beings, to enable to let this play out with capitalism, because we just haven't had capitalism. We've had creditism or cronyism, crony capitalism. So how does that play out where you're able to do that? I think that's the thing that confuses so many people.
Yeah, it's a tough one unless it's a lived experience. Mm-hmm. And you're probably talking to people who haven't lived that experience. So it's like talking to an academic. Academics teach, and those who do can, or those who can do. And I look at that and think, you're living in a world that, you've got skin in the game. You're the man in the arena. You and I are in the arena. We're living it. We're breathing it. We're living examples of, well, we just haven't found, and this is to my point, the guys driving around, worth hundreds of millions of dollars, driving around in a 10-year-old car. They just haven't found something that they want to buy, but they're still continuing to, pay money for rent, or, buy their homes, service themselves, do whatever they need to do. There's nothing that they can't afford to do, but they just haven't found something that's worthwhile doing. And this is where, with the money printer has eroded our understanding of how capitalism works. It's basically like money growing on trees. And so whoever's got access to that money can make money by simply buying investments. And what the system we're working in now, I believe, is crony capitalism, where those closest to the money printer are rewarded with the greatest gains. Those who can borrow money and have access to it can then go and buy productive or even unproductive assets and have an outsized advantage to returns and monetary benefits. There's no better way of seeing this than the smartest people in our society are no longer going for the toughest jobs in science or medicine or whatever it might be. Most of them are now looking to Wall Street to make easy gains and then go and live an easy life on the back of making outsized returns. And I look at this and think, this is where Bitcoin and capitalism really will reinstitute a very core knowledge from a broader society perspective that you don't have capitalism without capital. And so I just look at what happens from a personal perspective or a client perspective. You and I are basically traveling the same journey. What ends up happening is you buy Bitcoin, you sit on that for, call it 8 years. All of a sudden, your capital base has built up dramatically to a point where, oh my goodness, I'm now financially secure. I've got a whole host of things that I can do with that capital. I can buy a new home. I can buy a new car. I can, support a friend's business. I can, you now have the capital built up to make choices with that. Whereas on a traditional system that we're used to, that we think works, is if we want something, we go to the bank and say, hey, can I borrow money to go and buy that now? And so all it is, and this is a huge concept in Bitcoin, is that delayed gratification, that putting off what you can consume now for later. this is where, back to MicroStrategy, what he's doing is basically probably one of the greatest things ever, is he's now using that whole deferral of gratification to convert via traditional finance, debt and money into Bitcoin. Now, long term, we know exactly what's going to happen there. But in order to have capitalism, you need to have capital. And this is where Bitcoin, to that point, is you're going to have Bitcoiners basically have to build their capital up. And that's only done through time. You can take outsized risk by borrowing on Bitcoin to buy more Bitcoin, but that comes with inherent risk. And most people who try that end up with disaster stories. So I wouldn't recommend that. But you need to build capital to have a capitalist society. And this is where the US is the greatest superpower that ever existed from a capital perspective, capital creation perspective. And sadly, the last 50 years, the US has done their very best to squander all that capital in a pursuit of a whole host of irrational things. And this is where the finiteness of Bitcoin will institute a whole host of decisions that are going to reinforce a hard money standard and actually make the world respect a hard asset. And this is where my hope is that Bitcoin leads to a system whereby we're building a triangle, or we're building a pyramid where the base is the widest point. Now, Bitcoin standard, that's how it works. The current system that we're working with is an upside down pyramid where we're trying to fit all that credit on top of a tiny amount of equity. And that's not how capitalism works. Not a successful, stable system anyway.
Yeah. And to your point too, I think that it's holding opposing opinions in your head at the same time, or maybe that's not the right way. It's just two different ideals in your head, because I think a lot of people confuse the two systems where it's, like the return on Bitcoin, if we still have this a fiat world we're living in, which is probably going to happen for a little bit, it's that return is going to come down a bit every single year we go forward. So like you said, the Bitcoiners are holding, knowing, hey, we're just about to enter this S-curve exponential growth phase. So why would I buy something if I can just save and go through this? But 20 years from now, yeah, I mean, the return is probably not as great, or maybe it's just a Bitcoin standard. Maybe we're just working and earning in Bitcoin and we're providing value and you're just getting Bitcoin. There is no fiat. And then your purchasing power is just very high. Then at that point, I think that's where, like you said, this lived part, people haven't lived deflation, where a true deflation, a true capitalist society, where now you're just using this freely. It's not like, oh, do I hold it, or do I invest or not? Those questions are gone. They're things of the past in this like alternate reality that we live in. So I think those are the things that, again, it doesn't get talked about very much at a deep level. And I think it's so important. In saying that, we've teased about price a little bit, things of that nature. I know Jack Muller's always saying that, a lot of people do, but that money is half of every transaction, right? And there's 900 trillion or so in assets. And so 450 is the monetary premium that's out there. That's the market for Bitcoin. And so that's, 250 or 225 from here, 225x from here. And so to some of the numbers you've already kind of thrown out there. And so that's what Bitcoin can scoop up. So I would love for you to kind of touch on this notion that the Bitcoin is a triple point asset, and get into a little bit of this, because I haven't heard this. So okay. I was tipped off by Luke Mikic, and he said, you got to ask him about this. I haven't had it. So I'd love for you to kind of just go into this a bit and about where we're headed. And again, if you do agree with Jack, in the monetary premium being, around 450-ish, we'll say trillion.
I think, and I love Jack Mullers. I think he's one of our greatest advocates. He is one of my favorite hype guys. And not only that, he's whip smart and he's got skin in the game, and he is living and breathing this. He is one of the guys who, does, who can and does. So my only criticism of Jack, if it is a criticism, and I don't think it is, I think it's just he's working to an Overton window, and we all are. I think he might be conservative in his thinking on that. I think that the market is much, much bigger than that. And if you put the thought process that we are going to go to an over-collateralized system from an under-collateralized system in place, and you believe that we want to be working with a system that's the most stable that we can possibly have, not an unstable system. I think just with that notion there are circa $900 trillion of assets that need to be securitized, monetized, and collateralized. And the fact is that Bitcoin needs to grow to multiples of that just to provide that over collateralization. So when you couple in a whole host of economic terms in addition to that, such as price created at the margin, so all of that collateralization needs to be provided by only a very small percentage of the Bitcoin network, then you can have another multiple on top of that. But that's a different point to the triple point asset, and I'll cover that off. I just want to say that there's multiple ways of coming to an understanding of Bitcoin being worth thousands of trillions of dollars at the very least. That's from a collateral perspective. From an economic perspective, I look at Bitcoin and think Bitcoin is the first perfect money. It's what I call the triple point of money. And the triple point is a concept whereby an element can be in three states at the one time. So under certain atmospheric temperatures and pressures, you can have water, H2O, in the state of a gas in the form of steam. You can have it in the form of ice, a solid, and you can have it in the form of a liquid at a certain temperature, at a certain pressure. And this is very unique. And when you see it, and I urge you to Google it, you look at a YouTube video and just Google triple point water, and you'll see in a single beaker, you'll see ice, you'll see steam, and then you'll see water, all coexisting at a relatively low temperature. It's really bizarre. And it's because the effect of pressure on that beaker basically allows water to exist in all three states, or H2O to exist in all three phases at the one time. And I look at this and think, well, how does that apply to Bitcoin? And I look at Bitcoin and think there are three functions of money with Bitcoin. There is store of value, mean of exchange, and unit of account. And I look at those are the three phases of Bitcoin, much like water, ice, and steam. And for the first time in history, Bitcoin allows money, or the function of money, to exist in all three states at the one time. And if I just break that down, there are some technical innovations that allow Bitcoin to exist in those three phases at the one time. So you've got the function of store of value. That was typically, in historical context, was held by gold for thousands of years. And that was held by gold because it basically had the lowest inflation rate out of any of the other metals that we could use. It was durable, it was portable, it was recognizable. You could basically use that anywhere in the world. It was the same, so it was fungible as well. And I look at this and think, well, that was really good. But Bitcoin is better than that because it has absolute digital scarcity. So those three words, absolute digital scarcity, those three words were an oxymoron before Bitcoin was invented. It was not possible to have digital scarcity before Bitcoin was invented, and now we do. And the other thing is, we were never able to have absolute scarcity before Bitcoin was invented, and now we do. So I look at this and think, when you compare the 2% inflation rate of gold to the 0% inflation rate of Bitcoin, Bitcoin becomes exponentially better. And coupled with that, it's digital, so it's transportable all over the world, anywhere with an internet connection. All of a sudden, there's a huge, huge exponential upgrade in that store of value function of money. And a lot of people don't really understand what that means. But to put this into context, a 2% inflation rate in gold means that we're producing more gold in 1 year than existed in the year 1850. So if we look at that, in 170 years, we're now producing this financial year, in the year 2025, we're producing in this year alone more gold than existed in the entirety of history. That's insane. That's what a 2% inflation rate. And to your point earlier about Muhammad El-Arian and Joe Kernan giving Muhammad shit about the 2% inflation rate, that's what a 2% inflation rate does over 170 years. And what I'm telling you is Bitcoin is exponentially better because it doesn't matter if we go 100 years or 1,000 years or 10,000 years. There's only going to be 21 million. And so that represents an exponential upgrade on the store of value function for what we've got. The second is a mean of exchange, and I'll just gloss over this because it's probably the least important out of any of the functions of money. But you've got a $100 trillion market cap in the USD, global reserve currency. And people all over the world want to use the US dollar. They're not able to action or get access to that But guess what? Anyone with an internet connection can access Bitcoin. To me, the technological upgrade on the function of money for mean of exchange with Bitcoin over the US dollar is that it's censorship resistant and it's seizure resistant. Now, I bet Russia wishes they understood what Bitcoin was 2 or 3 years ago when the SWIFT system, the US government basically took their foreign reserves. They took $500 billion in foreign reserves from them. If they had have held that in Bitcoin, there was no way they could have recovered or stolen that $500 billion in foreign reserves from them. So I look at that and think censorship resistant, seizure resistant is a huge upgrade. Now, the most important part of a function of money is being a unit of account. And this is the most boring part to talk of, so I'll try and make it interesting. But we haven't had an accounting upgrade in the last 600 years. So the last accounting upgrade that we had, which basically accounts for everything, was the double entry ledger system that was basically the Phoenicians in the Golden Age. That led to a boom in global trade, circa, late 1400s, basically totally redefined global trade. The Medicis became basically bankers to the world. It led to an explosion in wealth across the world. Fast forward 600 years, we now see an accounting upgrade in that we no longer need a double entry ledger system. We now have a triple entry ledger system in the form of a ledger that everyone can see, verify, and it's an immutable ledger that cannot be changed. This is a huge upgrade to the existing financial system that we've got. And I just trying to put it in terms of why is this important? If you play a game, the only thing that you need to assure yourself of to make sure that you win that game is you just need to control the pen. If you control the pen, you win. And this is why they say the pen is mightier than the sword. Whoever gets to write down the score can tell who wins. And it sounds so plain and simple, but this is the power of Bitcoin, is that no one has control of that pen. It's an immutable ledger that everyone can see and everyone can verify themselves. And so this is why Michael Saylor is, absolutely pathological about trying to control as many Bitcoin as he can, because he understands that this is like the Chinese game of Go, where he is trying to cede territory on a finite amount of space. So if we look at it as a chessboard, he's trying to control as much of that chessboard as possible to control that outcome that he has. And he knows that everyone is going to need to use this as an accounting system moving forward. And so if you control the pen, or if you control most of the pen, the board, whatever you want to call it, then you're going to be able to garner better outcomes than anyone else. And this is where the whole world is going to move to that accounting system rather than the double entry ledger system that we've got. The world just doesn't know it yet. And this is where I look at this and I think, well, that's interesting. Well, the double entry ledger system, the unit of account, basically accounts for about $900 trillion of value in the world right now. Mean of exchange accounts for roughly $100 trillion. And store of value, the gold market, roughly accounts for between $15 and $20 trillion, depending on what you want to look at. And what's really unique about Bitcoin across these three things is that unit of account was dominated by a double entry ledger system. Mean of exchange was dominated by the US dollar, and the store of value function was dominated by gold. We have never in our history had one asset that dominates all three classes or functions of money. This is the unique thing about Bitcoin, where I look at this and go, isn't that interesting? Now, the interesting thing, and where people, I think, from an economic perspective, don't really account for the potential of Bitcoin the way it should be accounted for, is people look at this and think, okay, well, you've got $20 trillion of gold, $100 trillion of USD, and you've got, I like to say, $2,000 trillion of value that needs to be accounted for. So call it $2.1 quadrillion. Yeah. And if you divide that by 21 million, then you get to $100 million a coin. Personally, that's not how economics works from my understanding. And this is where I don't want to get into trouble from people going, there's no way you can come up with these numbers. It's not realistic. It's like, look, you come up with a better way of figuring it out, but this is what I've come up with. And this is why I'm far more concerned about the methodology and understanding the methodology before we look at the number, because the number doesn't make any sense. But in my world, economics works by when you create competition for an asset, it's not a matter of simply adding those values together, it becomes a multiplication of those values because you have a competitive tension vying for each of those things. So where this is unique in history is that we have never had store of value competing for unit of account, competing for mean of exchange. This is the first time in history that those three functions of money have had to compete for the grace of one asset. Prior to this, each function of money had its, apex predator in that function. Now we've got one asset which has to basically fill across those three functions. And my conjecture is that, like going to a house auction when no one's bidding, you're going to get a much lower price. But when you've got three bidders in the room bidding hard on that property, because that is the best asset for each of those functions, you're going to have an exponentially better return. So it's more like you need to multiply store of value by mean of exchange, by unit of account to get the addressable market cap in the future. And that's a number I don't really want to discuss because I don't even know what the number is, but it's a lot bigger than we can think of.
Thank you for explaining that. It's just mind blowing. And so a segue to that, this is, I think, what's so confusing for people when we're talking these different systems. Could you elaborate on purchasing power? So what do you think in terms of, because again, if someday fiat won't exist or whatever, it'll be, maybe it's very minimal or whatever was going on, but how do we quantify this? Because I think one of the big memes that's been kind of, viral over the last few months is the house getting cheaper in Bitcoin in terms, right? So we're talking about the system that we're going to have. And like you said, you can't even talk about the fiat numbers because the fiat numbers are fake. It doesn't make sense to say, hey, Bitcoin's going to be 1 quadrillion per Bitcoin, because who knows what that even means at that point. So I would love for you to elaborate on, people talking about, you could buy a house someday for 0.1 Bitcoin or whatever. But I think the moral of that story, though, is what we're driving at and what you're driving at, which is really important. People are looking and say well, what do I get for being a part of the system, or what happens in they're trying to turn their brain into thinking in sats or thinking in Bitcoin. So I would love for you to kind of elaborate people's life. What does it actually mean for the average person? All this, what you just explained is amazing. And it's the first time I've heard you explain that. But what does it mean for the average guy who's that's great, Peter, but I've got 80 IQ and I'm trying to figure out what do these stats mean to me, right? Brandon's sitting here hey, I'm my 80 IQ, old hockey jock guy. What does that mean for me, Peter?
It just means Bitcoin's going to go up a lot more than you can possibly imagine. And I look at this and think, that's great to look at the upside, and we just get lost in the ethereal nature of that, to tell you the truth. And it doesn't make any sense, because in my head, I think Bitcoin should be valued in the billions of dollars. If everyone understood Bitcoin to be what I understand it to be, then I think we would have Bitcoin today in the realm of billions of dollars, not hundreds of thousands of dollars or 100,000, sub 100. I'm this looks like the greatest opportunity I've ever seen, because once people really understand what that future value looks like, to me, and it's a fair value accounting measure, or net present value calculation, I look at this and think, well, Bitcoin should be in the billions of dollars today if they understood and the world operated the way I think it should, which would be infinitely better than what we've got, or exponentially better. But the flip side of Bitcoin going up dramatically, and this is to your point about the memes where property prices just continue to crash relative to Bitcoin, if we flip that and inverse that chart, property prices are going up. And the reason why property prices are going up is basically twofold. It's an inflationary effect, but the thing that's not mentioned that we've danced around is that our governments are debasing our currency to the tune of 7 to 10% per annum. And this is why property traditionally has gone up at 7 to 10% per annum, depending on what country you live in. It has basically mirrored the amount of money that they've printed every year. Now, is it causation or correlation? Take your pick, but the numbers look irrefutable. And the reason, and this is the problem that we've got to deal with on a personal level for us 80 IQers, is I'm earning more money on a per annum basis, but I'm feeling poorer. How does that work? Why is that happening to me? The reason that's happening is because although you may be getting a 5% increase in pay per annum, the money and the inflation is debasing you to the tune of 10%. every year. So all of a sudden, I'm now down 5% per annum, which means in a 10-year period, I've probably lost 50 to 60% of my purchasing power. And so although I started on 100K and now I'm earning 150K or 160K 10 years later, the cost of living that used to cost me 100 per year is now costing me 200. And it feels like I'm getting poorer. The only way to insulate yourself from that is to protect yourself from debasement. So the only thing that's not denominated in Aussie dollar, Canadian dollar, US dollar, choose your own adventure with whatever jurisdiction you're living in, is, and they're all the same. Every country has this problem. It's just that the US is the best at it, and it's basically out the scale of who abuses it the worst. The only way to protect yourself from that debasement of money is to go into a closed system where there is no debasement in Bitcoin. And so then you just let time do its thing.
Mm-hmm. So you were just saying this too, and we've been dancing around this in a way too. It's what's the real, bringing it all together in a way, or trying to. It's such a massive topic, obviously, to get your brain around. But what's that real hurdle rate? Because this goes back to, like, we're at the S curve. Like, this goes back to deflation. This goes back to all these things we've been talking about, where it's like, well, hey, Bitcoin guy, you just keep holding your Bitcoin forever. Like, you're not doing anything for the economy. And look, it'll just be deflation, and it'll just be a famine, and no one will produce anything because Bitcoiners are just sitting on their Bitcoin, hodling their Bitcoin. What is, like, do you think the real hurdle rate is 60%? Because again, the fiat, like the printing, everything that's going on, like, is that the hurdle rate you look at? You have a business, you talk to a lot of high net worth people, business owners, et cetera, et cetera. Is that how, because to me, that's the big thing. I think the past year is you have a lot of people talking about that more, which I think is, you see Bitcoin miners now putting Bitcoin on their balance sheet to a larger extent, right? They're raising money to actually do it. The MicroStrategy thing, we've been kind of going around this whole circle and this whole talk, which is phenomenal. But I think it's where does that end? To you, so twofold. First, is the Bitcoin hurdle rate right now, do you look at hey, 60% CAGR, so like that's my hurdle rate in terms of what I'm gonna do with my capital, and is that how you're kind of looking at it? And then also, is that where you're at a point of like, okay, now it's down to 10%, maybe it's a couple years from now, or 10 years from now, or whatever it is, and now it's at 10 or 20%. So now, okay, now I'm going to go start doing these productive things with society, whatever, buying more businesses or buying a multifamily, apartment complex or something like that. How do you look at those things?
I think it's a great question, by the way. And there are a number of stories that I'd like to share that I think will shed light on this. Recently, and talking to a lot of Bitcoiners, there are projects that captivate us, from whether it's an inspirational perspective, hope, a need to be in a social construct where, regardless of what your investment criteria is for an investment, something captivates you on an emotional level, and you make an emotional investment in that person, in that product, in that service, in that company, whatever it is. So this fear that people have about, oh, well, no one's going to spend their Bitcoin and everything's going to fall over, is just absolutely complete nonsense. That's not how the world works. We're social creatures. We want to be around friends and family. We want to support people who are pursuing things that are important to them. One of the things that I look at and think, and give a shout out to Jeff Booth here with Ego Death Capital. As a family, we've invested money with Jeff, and I've got to say I'm very skeptical that he can outperform Bitcoin. Like, to me, I think you've got to have not only a 50% risk-free return, but you then want a 30% premium in addition to that to make up for the risk that you're taking on that investment. But for me, I look at this and think Jeff Booth is the best of us. He represents, to me, the best in us as Bitcoiners. He represents hope, change, and opportunity. And the thought of being able to invest alongside him and his team, like, I look at that team, there's Jeff, there's Preston, there's Lynn, Nico, Andy, like, it is just a dream team. And I think if anyone can bring to fruition the promise of Bitcoin, I think it's that team. And, prepared to take an inferior return to help bring Jeff's vision for the world to market and support the companies that are actually going to build out the future that, ironically, is actually going to support and underpin our major investment in Bitcoin. I look at that and think, although it's not a logical decision, That is an informed decision where we want to support the best in the industry to help achieve their dreams and passions and bring to market what is, going to be beneficial for all of us. And I look at that and think, we all have an option to do that with what we do. So we're all allocating, basically everything we do in life, whether we want to admit it or not, is basically allocating capital that we think is going to maximize our outcome. Now, what people fail to understand is, and this is probably going down a spiritual route, but I think it's really important to discuss, because humans are basically, we are very complex creatures in that once we get past our needs, like our physical needs that are met, then we are satisfied on a completely different level. And if you look at the Maslow's needs hierarchy as a great way of shaping how things come about and what motivates us, when we have nothing, then we're really focused on security and making sure that we've got enough food. But once our needs for food are met, then we want to have love and connection. And how do we get that? Well, we do things in a social construct. Now, in order to satisfy those needs, once all of our physical needs are met, we're prepared to make investment decisions with an inferior rate of return if it allows us to meet the social construct or the needs that we want to pursue up that Maslow's needs hierarchy. And this is where I think that it's a bit of a moot point, that to think that the world's going to stop because everyone's just going to hoard their Bitcoin and no one's going to spend it just absolutely flies in the face of how humans actually work. And I think it's a complete misunderstanding of what motivates and drives us as creatures.
So well said. All right, couple of macro things here I want to touch on. What is you mentioned BRICS earlier. Why, real quick, you don't have to spend a ton of time on it, but why do you think BRICS won't work, or, what they're trying to do at least?
They don't trust each other. That's the simple answer. As bad as the US has been at abusing printing money, it's like, they're still better than the alternative. So once they figure out, do the Russians really want to be accepting Indian rupees for their oil? Probably not. And then do the Russians want to be taking Chinese yuan? This is the ironic thing. China's literally running 2 sets of books. I'm like, yeah. They run 2 currencies. I'm like, how on earth anyone can think that's a good system? At least, for want of a better term, the bullshit with the US dollar is in your face. Like, you get to see and measure it. But when you're running 2 sets of books, well, it's that old joke, what's 1 + 1? Ask if you want to find a good accountant, ask them what 1 + 1 is. If they're any good, they're going to look around, close the windows, and then whisper, what do you want it to be? That's what someone who runs 2 books can do to you. And I think, that's one of the major currencies in the BRICS. The other's the Russian. The other's the rupee. I look at that and I think, okay, well, I don't know how they're going to trust each other. And fundamentally, currencies come down to trust. And this is why the US dollar supersedes, any of the BRICS countries, what they can do. And this is why Bitcoin is going to supersede what the US dollar can do. It comes down to trust, and Bitcoin is the ultimate trust machine.
Okay, so you just tapped on it. I had a couple things I wanted to ask you about this very thing, in essence, or at least segueing into it very easily, which is some of these countries, obviously the BRICS countries, have just recently, over the last month or so, and for a while, but now just more nails in the coffin, I guess, in a way, of the dollar standard, but saying, hey, we're looking at Bitcoin. We're going to be doing this. We're going to be doing this with Bitcoin, or we're open to it, or whatever it might be, Russia, et cetera. So is that where you think this is heading? I mean, it makes me think of Saylor obviously really throwing the gauntlet down and saying, hey, let's demonetize gold. Let's sell some of the gold on the U.S. balance sheet and stick it to our enemies here. And then, then subsequently you have, all of a sudden, whatever, the Biden administration is like, well, we're going to sell a bunch of our Bitcoin to Silk Road. So you have like these competing things like going on, these 3 different points, like the outgoing administration, the incoming, Saylor, Trump, like, hey, we're thinking of doing this. And then you've got the BRICS countries. Is that, I would love for you to kind of touch on all of that. Just give me us your rundown on what's going on there, because there's so many unbelievable geopolitical things going on with that it just feels like a tinderbox waiting to go off.
Yeah, and this is where we're going to see the suddenly part really quickly. And if I can just step back and just marvel at Saylor's intellect and his thought process.
Unreal.
You know, he is so far ahead of anyone else. And until you just mentioned that, I was like, isn't that interesting? Why would he say that? And if we're looking at this from a game theory perspective, you want to accrue something that is the hardest money possible, which is Bitcoin. You also want to buy something that is seizure resistant and censorship resistant. Now, I'm not calling for this, and I don't want to come across as being in any way, shape, or form in condoning this, but a really important thing to think about is the US is the military power of the world. They don't need to accumulate any more gold. They can invade someone and take their gold. And the best part is that country can't dematerialize it and shift it anywhere on earth. The US goes in, conquers it, and then takes what's in the vaults and moves it. To Saylor's point that they should sell the gold to whoever wants it and go and buy Bitcoin makes perfect sense to me. Because if Russia does this, China does this and gets a head start on the US, and I want to see the US work and win, because I feel like basically in Australia we're a beneficiary of the US and a strong US. But where Michael Saylor's brilliant in that is that he's saying, hey, sell the gold that we can recover at a later date to buy the thing that if our enemies have this, there is a way for them to leave it out of our hands and to never be able to take what they've accumulated. Now, I look at this from a game theory perspective and think, well, if we're working in, say, 100 to century-long timeframes, it makes perfect sense to sell the thing that you can't dematerialize for the thing that you can. And this is the most important thing, that if China, Russia has it, and the US goes to conquer them to say, hey, give us your Bitcoin, they can literally spend that Bitcoin to an address that will never be recoverable. And then it's gone. No one benefits from it. But if you sell the gold to them and then you go and conquer them, not only do you get to buy Bitcoin, you get to take your gold back for free.
Yeah. Yeah. It's funny. I think of genius. I have multiple definitions of genius. One of them or parts of genius, but it's holding opposing opinions in your head at the same time, things like that. But I think one of the parts of brilliance or genius is figuring something out, or maybe being so bold as to, hey, I'm throwing down this gauntlet publicly, maybe in front of the world, that's so obvious that everyone could have seen, or it's so obvious in hindsight, but no one saw it. That's what's so once he, like you said it and you hear it and you're like, wow, it's obvious. That's brilliant, but it's no one said it. No one did it until he was saying it. And you're like, wait, what just happened? And it's so obvious in hindsight. It's just mind blowing, truly mind blowing in saying that. Oh, go ahead.
I was going to say to that point, and this is what I find amusing when Saylor talks of this. He talks about when he figured this out, when the penny dropped for him about Bitcoin, he basically couldn't sleep. He's trying to get the money on. He's realizing, shivers, someone else is going to come up with this idea and, front run me. And then he realized he spent the last 4 years, begging, pleading, preaching, educating people. Hey, this is the answer. And people are still ignoring him. It's just mind blowing. But therein lies what Bitcoin is. Yeah.
Literally. And I want to touch on something too. I don't want it to go unnoticed. You said something there, which I think is very important to someone who maybe is early to Bitcoin, or, just getting in or doesn't understand Bitcoin. You laid out basically what really differentiates one of the huge reasons Bitcoin is so different than gold is, or just even other assets, right? Like whether it's real estate or oil or whatever it might be, you can come and get beat over the head with, the wrench, and you can have your assets taken, or they can, government can freeze it, or, try taking your house across the world and you need to move, and good luck. Right. So Bitcoin stops and really demonetizes a lot of that behavior and de-incentivizes it or disincentivizes it, because you can't just beat someone over the head and take their stuff. Hence the Henry Ford, 100 years ago, the article, an energy money will disincentivize war, etc. So that, I think, is one of the huge things. Like you said it very, very easily, and it could have been, I wanted to note that again, because it's something that, again, if you're not in this world very much, you can kind of just gloss right by it. So that was such a huge point that you made right there. And Saylor too, really quick, it's fascinating to me because he was already a billionaire. And that's what I think people they forget too, that he was already a billionaire. And he was like, I could just sell my company. I could just be gone. I can retire. I don't need any of this. And here he is, a new lease on life, in essence. I mean, the guy has said it himself, right? It's really mind blowing. He's on a mission now. And you don't find that in the fiat world necessarily. Like, hey, I just got into Apple stock. Like I'm changed person now, like this guy was about to retire. He could have been just sailing on his yacht for the next 30 years, billionaire. And he's now, does more, talk and time and spending on it than anyone will say, quote unquote. And he doesn't have to. I think that's the thing that people, again, don't really understand. It's like, well, he's in it. He's pumping his bags. It's like, he was already had the bags. He already had them. Like, he could have been gone. So
I find it very altruistic. And I think, I'm very grateful he is in the game. I think he's our best advocate, our greatest orange pillar. We've had some spectacular orange pillars, and Max Kaiser, OG, Jeff Booth, one of our friends, who I love and adore, one of the greatest. And we're lucky to have Saylor basically spend his time on this. That like you said, he could just sit in the back of the boat, have a drink, and put his feet up, but he is in the game, and he works his guts out to do his very best to. Even if he affects one person, and he does a whole lot more than that. It's one convert.
He really does. Okay, we get a whole show on just the people that have contributed, just such OGs in the space and the mouthpieces. It really is phenomenal. I want to get your thoughts on a handful of things here. So the Bitcoin being the new petrodollar. What are your thoughts on this? The Henry Kissinger play of 52 years ago, whatever it was, and him. Basically, getting the Saudis making the deal and running the world basically, hey, we're taking off gold and oil is the new game in town, and the dollar is linked to oil. Now, seemingly, because this is the segue from what we just talked about to linking it to the dollar to Bitcoin. How do you see this playing out in terms of, again, you have these camps of, oh, Bitcoin's going to strengthen the dollar, and it's, yay, government or whatever. And for lack of explanation, I guess. And then you have, hey, it's going to take out the dollar, and in short order. And where do you kind of see this, playing out? I guess I know it's a tough, ephemeral question, but where do you kind of see this shaking out over time?
I think it's a transition to a hyper Bitcoinized world, but we've got structures in place that. We don't want to see destroyed in the transition there. And so to your point, one of the big things that I look at, and this is where, rightly or wrongly, I'm thrilled to see Russia get an understanding of what Bitcoin is, and the Qataris and Saudis understand what Bitcoin is and get into Bitcoin mining. My understanding of the world is, we've got these huge oil nations basically producing oil and exporting. They denominate, most of their global trade is denominated in USD, and there's circa $10 billion of trade globally on our oil markets. What happens when these producers start saying, hey, I only want to accept Bitcoin for this? Now, that makes perfect sense. You're exchanging energy for energy, fundamentally. Whereas at the moment, they're exchanging energy in the form of barrels of oil for something that just gets printed, that's worth nothing. So to me, I look at this and think we're going to have, this is in a broader context sort of point that's really important to make, is that there are probably two major sources of demand coming for Bitcoin. One is the switch from a petrodollar to a Bitcoin-based commodity system, whereby every producer of commodity is going to want to and enforce the payment in Bitcoin, because they know that is the scarcest asset that they can get for that barrel of oil, that ounce of gold, whatever they might be selling. That is the thing that they're going to want. And then you look at that, and just the oil market is a $10 billion a day market. Now, the Bitcoin community was frothing over the ETFs bringing maybe, $1 billion or $2 billion of demand to the Bitcoin market on a daily basis. What happens when there is 24/7, 365 demand of $10 billion a day from the oil markets for Bitcoin? What happens to the price then? The other component to this is, and the other major driver of demand is going to be from the bond market. When the 300 trillion in worthless or negative real yield bonds, figure out, hang on a second, we need to have a convertible note. We need to partake in what MicroStrategy is doing. And we want to get a real return. So we're going to buy those bonds that are backed by Bitcoin. Now, that's going to convert a whole and create a whole host of demand. And I look at this and think, we could have 10% of the bond issuance on a yearly basis go into Bitcoin. And that would be literally $7 trillion a year going into Bitcoin as demand. When you couple that with $10 billion a day in oil, that's going to be, circa another $3 trillion. Like right there, we've got $10 trillion worth of global demand on a yearly basis just for Bitcoin. I look at that and think, this is where we, enter the twilight zone. Nothing makes sense anymore when that happens. And from an oil producing nation perspective, I look at in the, say, geopolitical sense, why would they want to do that? And that's what probably most people are looking at, thinking, well, why would they actually do that? Why would they take payment for Bitcoin rather than dollars? It's like, because they want to be independent. If they take or sell their commodities for Bitcoin, they are completely independent. And I look at what happened in the geopolitical context with the Ukraine-Russia war and Nord Stream 2 pipeline being blown up. Russia spent billions and billions of dollars creating a gas pipeline from Russia down to Europe to supply them with gas. It took years and years of expense, and it took years and years of man-hour, billions of dollars to do that so that they could sell billions of dollars of gas to them on an annual basis. They had to ship that gas down to Europe to buy because they didn't have an internal market to monetize it. What happens when Bitcoin's trading at millions or tens or hundreds of millions of dollars per Bitcoin? All of a sudden, they don't have to ship any oil or any gas offshore. They can just buy Bitcoin miners and monetize it by basically becoming Bitcoin miners. Now, all of a sudden, that lowers the temperature from a geopolitical perspective because nation states can now harness and monetize their stranded resources. So all of a sudden, I look at this and think Bitcoin has a way, not only from a number of different ways, to really lower the temperature from a war perspective, because not only is there no monetary benefit in doing that anymore, it also de-escalates conflicts because Russia can basically keep all of their gas consumption internally by effectively mining Bitcoin. And I look at this and think, once the price of Bitcoin goes up enough, they're going to do that. And then Europe's going to have a problem because why would you risk, capital, time, energy, money in building out these pipelines that can be blown up by a rogue team of scuba divers when you don't have to face any risk by just mining it on your sovereign territory? Yeah, I just look at this and think we have so much to look forward to once the world understands this. And this is to that reverse triangle of capital that we need to get to. As Bitcoin grows up that stack and gets bigger and bigger, then these opportunities present itself, and I think it leads to a much, much better world.
Yeah, and you kind of just touched on, or not kind of, you did touch on really the other part of the demonetizing war aspect. So we talked about kind of the wrench attack earlier. People, you get beat over your head, your gold's taken or whatever, you burn your house down, all your assets are gone. Well, there's, you touched on this other part, and we're not going to get into it today, but just like you said, the pressure of the room and the temperature goes down, literally and figuratively, cleaning up the environment, what Bitcoin's doing there, which we had not even getting into that today, but it's when the world sees what's going on within the Bitcoin network, it's going to just blow people's minds. It's going to blow them. So what do you think with yields spiking? What do you think is going to happen here with Trump? Obviously, he's very linked to the stock market, and I'd love for you to kind of unpack this a little bit. What your thoughts are? Are they going to come in and kind of really get the puppy humming here and be on Jerome Powell to drop rates, and because we know he looks at the stock market every day, and now apparently he's looking at the Bitcoin price every day. So Trump's going to have those two tickers sitting there and watching those as gauges as to what's going on. What's your prognostication here?
It's a very good question. It comes in many layers. I look at this and think he is looking at all of this. Depending on what he is trying to optimize for is going to be the result of what we get. So you've got, I guess, that 10 years really spiking, and all of a sudden we're coming out of an inverted yield curve, which has been for years. There is that premise of, well, maybe inflation is coming back and the genie is out of the bottle. If you look at historical records and overlay, say, what's happened in the last 4 years with what happened in the 70s, then it's tracking really well to have a huge increase in inflation, and that's going to not bode well for a drop in interest rates. The key metric is going to be is, does this Department of Government Efficiency, or DOGE, is that going to produce the outcomes that's going to help lower inflation, drive economic growth, and then relieve pressure on the interest rates and take pressure off there? I don't think, actually it's really hard to bet against Elon because he just proves everyone wrong. But I look at this and think it's hard to bet against Elon and Trump in this, in that they work in very different ways. They have key outcomes and drivers that they're trying to achieve. And a lot of the time, I think the messaging that they deliver is misunderstood. And a lot of people who know less than them will say, oh, there's no way that will work. That's not going to work. That's going to lead to X, Y, and Z. And then fast forward, Elon Musk is catching spaceships with chopsticks and doing stuff that no one could have dreamed of. So I think betting against those two is going to be very difficult. So I like to think that they can craft outcomes that we can't see or understand yet. Because if you look at it from a traditional view, you'd think that this spiking interest rate on the 10-year is going to lead to and further compound the inflation problems that we're going to see. And then that's going to make the DOGE efforts all the more harder, because at the same time that they're cutting jobs and trying to create economic growth and room for economic growth, they're going to have inflation spiking, rates spiking, and it's going to be a bad outcome. But this is where I look at Bitcoin as a solution, because it's probably the most egalitarian investment that I've seen. It's accessible to anyone with a smartphone. And I look at, in the US, what is it, a population of circa 350 million, approaching 400 million people. And I would have thought there'd be over 300 million smartphones there, probably closer to 350. About 90% penetration, I would have thought, in the US. And anyone with a smartphone, can purchase Bitcoin now. And I look at this and think, will Trump want to endorse and help facilitate that outcome? If I look at his administration team that's coming in and think Howard Lutnick, heavily in the bag for Bitcoin, RFK Jr., one of his largest investments is Bitcoin. Vivek Ramaswamy has had his Strive Asset Management change his investment thesis with the SEC to allow for investment in Bitcoin ETF. Everyone in that administration is in the bag for Bitcoin. So I look at this and think there represents a rare opportunity in US culture to embrace Bitcoin and endorse it, much the same way that they endorsed home ownership in the late 90s. Obviously, the late 90s endorsement of home ownership to open that up to anyone who wanted a home ultimately led to a problem with the GFC later. Those policies that they crafted in the late 90s, which I think was overseen by Bill Clinton, they could do the same thing with Bitcoin and draft policies, create government incentives and outcomes to drive Bitcoin adoption. And then to one of the points we raised earlier, that $1 trillion into Bitcoin is going to create $50 trillion in equity or collateral. I look at that and think, well, what if that's the plan? And we've heard Trump allude, even facetiously, to the fact that he could pay off the US debt with a little Bitcoin. So if that's the case, one Bitcoin could pay off the US national debt. That's currently trailing at about $36 trillion. So maybe my method for calculating Bitcoin is a lot closer to the mark if Trump thinks it's 36 trillion a coin.
Yeah. Yeah, I think you might be right. It's funny because it's, like you're trying to gauge what's going on in a way. And that's what's so, again, you have to hold these opposing opinions in your head, but you're flying at 30,000 feet, and all your gauges are broken, like GDP, bond yields, like these are antiquated metrics in a way, like that won't exist as we know them in the future, and that's what makes me think of Jeff Booth. I was just, again, listening to one of those things earlier, like I mentioned, and he was talking about that very thing of, that's the difficulty in why it's so confusing for so many people, because you're trying to put it into this box that it doesn't, the toothpaste out of the tube. Like you can't do that anymore. And so that's where it's go ahead.
The other thing with that, to your point, the metrics that we've got to measure our system, they are literally lying to us.
Yeah.
They have a rerun
on top of it.
That. So it's like we're trying to find it. We're literally trying to fly a plane with instruments that don't work. And let me just sort of put this into context. We've got unemployment numbers that are revised 6 months after the fact, where, back in 2022, July 22, they said, our unemployment numbers are good. Fast forward 6 months past the midterm. So it was a highly politicized adjustment to that economic number of unemployment. Yep. They said, we've just found 1.1 million people unemployed. Now, that would have absolutely led to a red wave if that was reported in June as opposed to December that year. And in addition to that, we've had the revision of what makes up a recession. 2 negative quarters for my entire life was what you classified as a recession. But we've had 2 negative quarters, but because unemployment was okay, which they actually consequently bullshitted about and revised downwards or upwards by 1.1 million unemployed. It's not a recession. I'm like, they are just lying to us at every opportunity. And it's like, I'm sitting here and this is, you've got me going, because I'm sitting here responsible for allocating hundreds of millions of dollars, which is trying to improve people's lives based on the numbers that they're telling us. And I'm like, I've gotten to a point where I'm like, I just don't believe anything I'm being told now, because I'm waiting for the revision 3 months after the fact that, that number that we thought was really good. It turns out it was really bad. We just happen to find 1 million unemployed. And so this affects not only the interest rate, we've seen it with the unemployment rate, we've seen it with the inflation rate and CPI, we've seen it with the production of money, how much money they're producing. Just every single metric is it's a fugazi.
Do you think that I go back to the hurdle rate we were talking about before, and again, like the 60% CAGR, that compound annual growth rate is, for someone who don't have to go look it up. That to me, for a long time, for a number of years, I felt like, to me, that was the inflation rate I used, really. And it was higher, and then it keeps, slowly coming down over time. But to me, if Bitcoin is the only free market in the world. So that to me is like, you're printing that much currency, I guess. I don't know what else to say. And then I've recently heard more people saying, I'm sure I wasn't the first person to think that, but I've heard Jack Mallers talk about it recently and stuff like that, where like, hey, my inflation rate is 60%. If Bitcoin's telling me that's what it is, that's the only gauge that's working in my aircraft, I have to go by that. And to me, like you said, like all these numbers are just fugazi. They're completely fake. They're lying here. They're taking stuff out of this basket, CPI and this and that. You can't trust any of it. So, and then you talk about dollars here in America, then there's, Eurozone or the euro dollar market. Like it's such a mess and such a disaster. Bitcoin's the only working gauge. Am I wrong for thinking that way?
That's exactly how I feel. And this has been a conscious decision for me that, the funny thing is, like, I have to straddle traditional finance and Bitcoin. And ironically, our traditional finance portfolios have absolutely smashed all conventions and norms when it comes to performance. And that has been because there's a deep understanding of the Bitcoin system. And without wanting to say really downgrade traditional finance, like we've been able to outperform, say our index in Australia, All Ordinaries, to the tune of probably somewhere between 200 to 300% better returns than what the All Ordinaries has done. And we've outperformed the NASDAQ, we've outperformed everything else. But it's been in highly volatile assets, and this is excluding Bitcoin. So taking Bitcoin out of the portfolio, which is a big handicap. But we've still been able to do that because, there's a complete misunderstanding of the system that we work in. And this is where, when we're talking to clients about, in a traditional sense, about what they're looking to achieve and how they're trying to create those outcomes, one of the things that we focus on, which I haven't really heard a lot of people talk about, is you really need to focus on capital efficiency. And this is where most advisors, investment advisors, or anyone working in finance sort of sits there and goes, well, what does that mean? It's like, you need to look at how to create the maximum efficiency from the assets that you're given. And there are some traditional metrics to look at that: return on investment, return on equity. But you need to look at the after-tax consequences of that too. And you need to look at and think, what is going to be the best way to maximize total return? And this is where, once you overlay and have to account for the taxes in the system, then the investment objectives become very different, because you don't want to be in a system that's basically creating income. Although a lot of baby boomers and older clients want the perceived security of having a safe income, But they don't realize that that's at the expense of the total return, because you're getting taxed 50 cents on the dollar in the income, but the capital gains, you're getting taxed less than 25%. So, do you want the peace of mind or the illusion of being able to sleep at night knowing that you've got stable income? Or alternatively, do you want to maximize returns? And this is, part of my job is, spending a lot of time on understanding Bitcoin, because once you understand Bitcoin and you get comfortable with it, and you, more importantly, get familiar with the volatility of Bitcoin, that will inoculate all of our clients from the volatility of the portfolio on the other side. So back to this thing, trying to make investment decisions in this market where the numbers don't make sense and they're literally fabricated. It's a very tough thing to do. So I find myself spending more and more time focused on Bitcoin rather than the TradFi world, because it's something real, it's something I can trust, and most importantly, I can verify everything that's happening in that world, as opposed to having to rely on numbers that are made up by political appointments.
Okay, I got last question, and then I've got a couple lightning round things to wrap it up here. We've been going for an hour and a half. I want to be cognizant of your time, Peter. What are your thoughts on the power laws? Giovanni, he's been making the rounds. Obviously, I'm interviewing him soon as well, and I was listening to Luke and. Just the back and forth the other day is just comic. I love Bitcoin Twitter. I would love your quick, just, synopsis. We don't have to get crazy into it, but I would love your thoughts on the power laws.
I think it's convenient at this point in time. I think what Giovanni's contributed to this space is enormous. I really love that he's bringing in new people to Bitcoin based on his power law. Would I personally use it for trading Bitcoin? No way. I don't think there's value there for me. And I say that personally, that I don't find value in using that as a trading tool. I just wouldn't trade Bitcoin, because I personally think Bitcoin breaks to the upside and all models will be destroyed, including the one I talked about earlier. I personally, because I look at this and I think, and maybe if Giovanni's watching this, he can correct me because I am a Luddite. I look at the fundamental premise of that is, I think, fails to understand that the power law is actually based on the US dollar, and the US dollar is in exponential decay. So I'm like, how do those two things square?
Yeah.
And he says, oh no, the power law's got to go like that because through time it's going to be a reversion of the mean, or it's going to basically get lower and lower returns through time. And it's like, well, I don't know how that's the case when you've got an exponential decay of circa 7 to 10% per annum in the underlying measurement of dollars.
The denominator.
So,
Yep.
Correct. So I look at that and think, how can you have that if you've got an exponential decay in that? So that's probably the fundamental question I've got that raises questions for me, that thinks that I don't think that will hold over the next 30 years. I think that will break to the upside, and then,
Yeah, I think you said that so well. I think it's everyone brings their own unique position to Bitcoin, their own unique processes too, and I think that's what, whether it's the Plan B stuff, in power laws now, like those things all bring people to Bitcoin. I think that's what we have to take really from all of it, right? It's like you said, it's great marketing, it's great bringing people in, making it easy to kind of understand what's happening. I think that's what's very smart and very good. And then I'm looking forward to asking him. That's basically my question, and what I just don't understand totally is what you just explained. So I look forward to asking him that.
The other thing I'll say on Giovanni, aren't we privileged to have him share his ideas with us?
Yeah,
I just think this community is absolutely wonderful. So
wild.
Say hi for me. Tell him I'm a fan. And although I find it funny the spat he has with British HODL,
so funny.
I'm grateful that he shares all of his thoughts and insights with us.
So good. I mean, we really are blessed to be in a community like this with, some of the smartest people in the world. Now, are we all right? Are we all wrong at any given time? Yeah, of course. But that's what makes the world the world. And I feel like we have the smartest people in our community, which is only a good thing. So, all right, lightning round, a couple things that kind of come to top of your head. We've got 4 of them here. biggest threat that Bitcoiners are missing. So not people that are, not in Bitcoin, but maybe the people that are in Bitcoin, all of us that are kind of, spend our day, I guess, more or less, or at least you spend your whole day or at least a majority of it. Biggest threat people are maybe not attuned to.
Apathy. The fact we think it'll be okay. That would be the biggest threat. So,
I love that.
And I guess that can be described as interest as well. So that would be my number one concern.
I love you said that, because that's, Bitcoin's a human system at the end of the day. It could run for 1,000 years, but if none of us care about it or none of us use it, then it doesn't matter. So yeah. I love that. I absolutely love that. Should we start referring to Bitcoin in this is a language, watching our language, I guess, question. Should we start referring to Bitcoin in sats and in using a different denomination in that lower denomination just for unit count bias? Where do you come down on that debate? Not changing. I know there's people out there like, we should change it. It should just be all sats or all Bitcoin or whatever. But do you think we should just watch what we're saying in that way we're using sats more going forward? Or do you think it'll be inevitable and you kind of have to eventually?
I believe in the inevitability of it, and sort of being able to put off a delayed gratification on that. If we change it to sats, then the unit bias might have an ability to really pump the price dramatically quicker. But do I really care if Bitcoin gets to $1 million and then in the space of 2 weeks it goes from $1 million to $2 million a coin because we're now in sat cent parity?
Right.
No, I don't. I think that'll be a fun time too, because it'll get to $1 million and people will think, oh well, show's over, I've missed it. But now when we're pricing Bitcoin in sats and it's like, oh yeah, 1 cent, 1 cent.
Yeah.
It's like, oh wow, hang on, it's gone from one sat per cent to 1 sat for half a cent or whatever. So all of a sudden I think we're going to get, whether it's now or later, it doesn't matter, but then we'll have the jump where it just doubles or goes exponential from there. And that to me is where the S curve kicks in, and the price action goes from looking like that parabolic curve where it's just curving out to then, oh no, we're just going up forever.
I love that. Do you think Bitcoin is an invention or a discovery?
Oh, that's quite a question. I'd probably err on invention, because to say it's a discovery would believe in a previous existence to us. So I'll go with an invention.
Interesting. I love getting people's take on that. And it's like 50-50. I love it. Prediction for this year. I guess your prediction, again, we've talked about price and sats and purchasing power and how hard that all is, but what do you think it can be a range, I guess. What is your outlook for this year, or it could be this cycle, I guess we'll say, even the next few years?
I think we'll see somewhere between $300 to $1 million a coin in the next 12 to 18 months. I think the key question is going to be, with the Strategic Bitcoin Reserve, institutional adoption, the ETF launching, and Michael Saylor making convertible notes a real thing, is this going to create an extended boom that brings an end to the 4-year cycles that we're familiar with? To me, it makes sense that there is a possibility of that, but again, due to PTSD of thinking, hey, this is a super cycle, we're all for it, it's going to be the forever cycle, which is a great term, where it's just up forever because we've got an unlimited bid underneath it. I sincerely don't know, but I think we're on track over the next 10 years to get 100x return. So, we're talking in 10 years' time, I think one Bitcoin will be, 10 million bucks a coin. So that's a pretty good growth rate over the next 10 years. And it's kind of on track for what Saylor talks about in 21 years to be 13 million bucks a coin.
How do you see, because again, everyone has their different definition in a way, I guess. Like, how do you see the whole debate between the ending of the super cycle or the beginning of the super cycle and the ending of the traditional 4-year cycle? How do you define it, I guess? Because I feel like everyone gets into this debate, but everyone has like that different way they kind of look at it. So how do you see it?
I think, the end of, or the start of a super cycle would mean a sub 50% drawdown. That to me looks like a super cycle.
Yeah. Okay.
We have multiple drawdowns of 30, 40, 50%, in a bull market.
Mm-hmm.
And if we saw, say, a bear market drop less than 50%, I look at that and think, that's a super cycle, because being able to pull up on that should happen. That will happen at some point in time. And then what I'm waiting for, and this is what the cycles are going to be relevant until they're not. And to sort of put some context to that conversation is they're going to be relevant until one of the superpowers of the world literally holds their finger on the money printer and says, I will put a bid in for Bitcoin at 1x, 5x, 10x, whatever price I've got to get. I will take every single coin that's sitting on exchange and I will pay whatever is required, because they have a money printer that they can hold their finger on the button and they will literally teleport the price overnight 10x if they have to get what they need. And this is where I don't know when that comes. Is that going to be in? And then all of a sudden, when that comes, and I'm not doubting when it comes or if it comes. I think it's a certainty. It's a matter of when, not if. And when that happens, then every cycle, everything that we know is completely irrelevant, because we are now living in the twilight zone.
It's so true. That to me, that's it right there. That's the game. And when plebs, when you and I, people that we, our friends, people that, are going to conference and, hey, when those people are selling a coin or whatever it is, half a coin to a nation state for an ungodly amount of money, and that transfer of wealth is happening, that to me that day is coming quicker than people believe. And that's going to be just mind blowing, absolutely mind blowing, that transfer of wealth. Thank you so much for all this. This has been absolutely, I've had you for 2 hours now, Peter. Where can people find you, number one, but also tell us a little bit about Bitcoin Advisor, what you guys are working on, and, a quick breakdown for people who don't know. Like I said in the beginning, I gave you a quick one, 2 lines on it, but what are you guys excited about right now, and what you're working on, and then where can people find you?
Thank you for that. I guess we're working on helping get every single Bitcoin off exchange. So it's a noble goal that we want to help everyone self-custody their Bitcoin. We've got a great process for helping people do that. However, typically what we find is that there are certain life events that change people that reach out to us. And that is for someone who has reached a level of wealth where most of their wealth is in Bitcoin, or alternatively, a new family has sprung up that they're now responsible for a wife or a husband and a child or two. The need to preserve that Bitcoin and remove any single point of failure from that self-custody setup is critical. So we help people self-custody their Bitcoin in a way that they cannot lose it. So if something happens to them, their wife, their children, their loved ones are going to benefit from that. And this is where the message to all Bitcoiners out there who are watching this, and if you're still here watching this after an hour and a half or more, obviously hardcore Bitcoiners, my message to everyone is you do you. If you're self-custodying your Bitcoin, you're clearly down the rabbit hole and have spent a lot of time getting there. But if you're concerned about what would happen to you if you don't wake up tomorrow, then that's probably a service that you would benefit from greatly, in that we don't really service Bitcoiners because Bitcoiners are capable of looking after their own Bitcoin. What we're really there to service is the Bitcoiners' family, friends, beneficiaries, whoever it might be, who is going to benefit from their Bitcoin. It might be a loved one, wife, children, whoever that is, who's not yet capable of self-custodying their Bitcoin. They really require us to come in and help them to make sure that there's absolutely no way they can muck that up. And so that's the service we provide. And it's basically a peace of mind and a surety that regardless of what happens to the Bitcoiner and the family, that the family is going to be able to benefit from it, because it can be quite a daunting task when, particularly when the price of Bitcoin rips 5 or 10x from here, and you've gone from looking after tens of thousands or hundreds of thousands of dollars to millions of dollars. It's a very different mindset that you need to come with. So that's our job. That's what we love doing, and we love working with families who want to secure their Bitcoin for generations to come.
It's amazing. Noble work. And we need more people like you in the space. That's for sure. Where can people find you at?
The easiest place is thebitcoinadvisor.com, and that's advisor with an ER, or I'm on X at Peter BTC Advisor with an ER. So any questions, reach out. We'd love to help you. And we've got literally a team of some of the best Bitcoiners in the world. I can't tell you how proud of the team I am. I'd like to think I'm pretty good at Bitcoin, but when you have a look at the team, I'm way down the ranks when it comes to to that. So there's an A-grade team, and we can look after anyone anywhere in the world. So please reach out, let us know. We'd love to help.
Mr. Peter Dunworth, thank you so much for joining me for nearly 2 hours and being a playable character in a sea of non-playable characters. Thank you, sir.
Thank you.
If you like this interview with Peter Dunworth, the founder of Bitcoin Advisor, you're going to love the one we just did with Neil Jacobs, where we talk about everything we've learned over the last 16 years in Bitcoin, where price is headed here in the future, and all things OG Bitcoiners. Go check that out here. But you might like the one where we talk to Aladdin Flynn. That might be more your cup of tea, where we talk about the founding of Bitcoin trading cards, what he's doing to educate Orange Pill the masses like no one else, and where Bitcoin will be a year from now. Hint, he thinks it's gonna be at 1 million, and why and how. Check that out here. Not gonna wanna miss these episodes. They're unbelievable. We'll see you in there. Come on.